In this training, I'm going to walk you through how to do some education planning in the Voyant Canadian software, as well as how to schedule a rollover for any remaining funds left over in that account. So the first thing I wanted to point out to you is that we're going to be doing a education planning scenario for Amy and her two twins, Timmy and Emily. And I'm going to start that by going to our plus button and going to savings and investments. We're going to start on the investments section, and here under type, I'm going to use this drop down to select our registered education savings plan, or RESP. We're going to give this a name, and we're going to enter in its current balance, and this is going to be the balance in total for the account. We're going to put in any of Amy's individual contributions and then split out the government grants balance. And this is going to be for two children, so we're just joining this account into one. Our purchase year is 2015, and you'll notice when we enter in that year, we are automatically defaulting to a 36-year in the future account closure year. What you can do is if you would like to model a rollover sooner than that, you can by simply editing this account closure year. So let's say we do the account closure year and rollover at year 2040. You can adjust your fee rate here if needed, and then account for any ongoing contributions here in the contribution section. Next thing I want to do is assign our beneficiaries, and to do this, I'm going to toggle these on here and select a 50-50 distribution. You can also do exact amounts if you'd like. Under timing, I want to make sure I have these contributions scheduled. So I'm going to set the start event, and we're going to do our end event the year that she buys the boat. So she's going to be contributing to this account until year 2030. For fund distributions, I'd like to toggle this on and designate that any remaining growth on this account be contributed into Amy's RSP. So I'm going to select that option, and we're going to click done to save this. So we now have the RESP in the plan, and I now want to account for the expense that Timmy and Emily are going to incur from university. So we're going to do a goal, and we're going to do an education goal. I'm going to assign this one to Timmy, and I would suggest putting the goals in the children's name, and I'll explain why here in just a moment. So let's give this an annual expense, $12,000 annually for Timmy, and we're going to do timing, and this is why I would suggest putting the goal in the child's name. If you do that, it will automatically calculate for you when they turn 18, and you can create events on the timeline based on their ages rather than Amy's. So I'm going to click yes and create those events. And then for payment sources, I want to make sure that we are using the RESP first before we use any other money available in the plan. Next, I want to save and add another and do the same thing for Emily. Give this one a name and an amount. Same thing for timing. I want to create the events for when she is going to be 18 and end at age 22. And then for payment sources, I just want to define the RESP as our preferred source. Now I'm going to click done to save, and you'll see on the dashboard here that we now have these goals in the plan, and we can see whether or not we're on track to be able to meet them. You can also go to year view and review everything that's happening during those years. So let's take a look at the years that university starts. That would be year 2032. In the cash flow, you can see we have money coming out of university savings. This value has been inflated up to a future value. So we started out at $12,000 annually, and we're now modeling it as a future value of $16,000. If you go to expenses, you can see the two education goals are being counted as expenses. And if you click on them, you can see what payment source we're using to fulfill this expense. And we're using the family RESP for both Timmy and Emily's expense. This will be in the plan for a few years, and then when we hit the year that it falls out of the plan, you'll notice that that education goal is no longer in the expense section. And we can go to investments to see how much is left in the family RESP. This is broken down between Emily and Timmy, so you're seeing 50% of the balance in each of their names. And then this will grow in this fund until we do our rollover in year 2040. So now we're in year 2040, and we can see a $90,000 contribution to Amy's cash. We can see $56,000 respectively from each of the RESPs coming out. And we can go to our pension section and see how much is being contributed to the RRSP. And if you want to see the breakdown of what was left in the RESP, you can click on Emily and on Timmy to see the account closure details. So you can see what the return of capital contributions was. So that was $45,000 for each, Emily and Timmy, and so that combined balance was contributed into Amy's cash. And then there was income growth on this account of $11,000 for each, around $22,000, and then that was contributed into Amy's RRSP. I hope that this has been helpful. If you have any questions or you'd like some assistance doing education planning in Voyant's software, you can always reach out to us at support@planwithvoyant.com, or you can send us a request from your client's plan by clicking their name in the top right corner, requesting support, entering your question into the text box, and sharing client access. Thanks for listening.